those things. Paul Tudor Jones joins us this morning. He's the founder and chief investment officer of Tudor Investments, chairman of Just Capital, and founder and board member of the Robin Hood Foundation. He's going to be having a virtual fundraiser this evening that's going to be carried on CNBC. We're going to talk about that in just a minute, Paul, but we're thrilled to see you. You told us in late January, back in Davos, to be worried about this pandemic, and then we talked to you again about 6 weeks ago in late March, and you had a much more optimistic point of view, both about what was going to happen in terms of the health issue and also in terms of what was going to happen to the markets. You've been right about the markets. On the health issue, you had suggested back then that you thought only 40,000 people, there'd be 40,000 deaths in America. And I wanted to understand your analysis as you look back on it now and what you're thinking about looking forward.
Thanks, Andrew. Well, when I said that on your show last time, that was probably, at the time, I think that was on the less optimistic scale of what people were forecasting. And it was difficult at the time to even, if you'll remember, it was difficult to even comprehend 10,000 deaths. Now we're obviously at 70 plus and counting. You know, the American people are a unique breed. When you think about it, we have a Second Amendment that says it gives us the right, we have an amendment that says we have the right to bear arms. That's an incredible mindset when you think about it as a people, so that we will never be under the yoke of a tyrannical government. We have states whose motto is live free or die. So I think America's greatest strength is its individualism, its love of freedom. In the case of this pandemic, it's also our greatest weakness, because if you look at the Asian countries that are succeeding in beating this, they're doing it because they place a much greater emphasis on societal values than they do on individual rights. So it's very difficult to get Americans to act as one unit, to come together and to do what's necessary to actually, again, reduce the number of COVID cases. And again, I think it just goes back to the core of who we are as a people. And I don't necessarily see that changing going forward. So we're clearly the hardest hit of any country in the world. And as far as the eye can see right now, certainly with the kind of mentality that we've got and the leadership that we've got, and I think just the core basic principles of who we are, I don't know if that's going to change.
And so how does that impact your thinking about the world of investing? Does the stock market look fairly valued to you, cheap to you, overvalued to you?
Well, I think again, the last time I was here, I thought the market would be higher at this point in time. Primarily, it's higher because we're in a liquidity-driven state. I think this part, the bounce, was easy to forecast. I think what happens from here, again, depends a lot on COVID. So there'll be a shift in focus from liquidity issues somewhere down the line to solvency issues. And if we start seeing, if we don't find a vaccine or a cure, if we don't find a much better way of testing at scale for the population, so that we can get back to work, and we start seeing daily doses of bankruptcies and other insolvencies, and I think the market's going to have a much more difficult time. So much of this is path dependent on what happens with our response to COVID. Can we find a way, with or without a vaccine, to get people engaged again? There's that dynamic tension between the health costs and then the economic costs. But I wouldn't say just the economic costs. They're probably, the one thing I get nervous about with regard to the self-quarantining, and I've been doing it now like all of us have for the past 2 months. If you just think about the track of human history, right? Every year or every decade that's gone by, as we've added more humans to the planet, by definition, we probably become more urbanized. We've crowded together. It's because we're social animals. But with that has also been an attendant drop in the number of wars we have, our violence towards each other. even our poverty rates are probably the lowest in the history of the world, or were before COVID. So we are by definition social animals, and our sympathy and empathy and compassion and kindness, the more that we're together, I think the more those values become embedded in who we are, and it's been a good thing. The social cost of quarantining, of self-quarantining, which I don't know, but it's a legitimate question, is if we look back and we're doing this for another year, or the world is, do we begin to chip away at the very traits, again, of kindness and brotherhood and sisterhood? Do we begin to chip away at those because we're all isolated? I don't know the answer to it, but it's something that stays in the back of my mind, particularly as we go through our weekly Robinhood meetings and we're thinking about programmatically the people are in need. Right now, we've had this great rush to help, and I just hope it continues. I hope that we continue with the same sympathetic responses that we're seeing right now.
Paul, but doesn't that suggest to you, I mean, if you're talking about the American will, the will of the people to be social, and we're starting to see it across the country, irrespective of in certain cases, what the municipalities are saying, or even what health experts are saying, perversely perhaps even, isn't that suggestive and promising for the economy?
I think it is promising for the economy. And again, I don't pretend to know what the right balance is, and I don't pretend to know the right answer. The costs are so huge on either side of the scale. The COVID costs in terms of deaths is tragic and horrible, but then again, we've got the economic costs and the unknown and unquantifiable social costs of self-isolation. So I don't know what the right answer is. I think the market's going to figure this out. We're obviously doing that right now. Certainly our cost has been much higher than a variety of other countries who have a more stringent lockdown. And I don't know necessarily what's the right way that we should be doing it. I certainly in China, South Korea, et cetera, we can't even compare their situation to our situation because they have such fewer deaths, et cetera. But the way they got there is they have a phone with an ID number, and you're tracked. You're tracked every single day. As a society, are we willing to do that? Again, I don't know the answer. I think I know I don't know what the right answer is. I think I know what the answer is. I think Americans are too different. I don't know if we'll be able to come together and do that.
Paul, for a long time, you were a skeptic of Bitcoin and some cryptocurrencies, but you recently appear to have changed your mind about that. What happened?
Well, COVID happened, and the great monetary inflation happened, and that made me begin to think about how do you want to be positioned in your portfolio going forward. So that's really what tripped my interest in Bitcoin. And you have to realize, if you just think about, say, Bitcoin versus cash, right? Bitcoin, when I think of stores of value, I think of it four ways: purchasing power, trustworthiness, liquidity, and portability. That's kind of the categories I put it in. So when it comes to trustworthiness, Bitcoin's 11 years old. There's very little trust in it. We're watching the birthing of a store of value, and whether that succeeds or not, only time will tell. What I do know is that every day that goes by and Bitcoin survives, the trust in it will go up. If you take cash, on the other hand, and you think about it from a purchasing power standpoint, if you own cash in the world today, you know your central bank has an avowed goal of depreciating its value 2% per year. So you have, in essence, a wasting asset in your hands. So Bitcoin, I think it's a great speculation. I've got something between 1 and I think just over 1% of my assets in Bitcoin. Maybe it's almost 2. That seems like the right number right now. It's not, for me, it's not the greatest. It's not the great cure for all the monetary ills, et cetera. It's a great speculation. That's what I would say Bitcoin is.
Right. Paul, do you see this, though, in relation, and I'm thinking about tech stocks now, because one of the things we have seen even over the past 2 months is just the move towards virtual. Anything that can be done virtually has had great success, whether it be Zoom or any of the big tech companies in the Valley, because we're all able to do that virtually. Is that the way you see Bitcoin? And separately, do you own gold? I was going to ask at the same time.
I have assets in gold also. I think gold can go substantially higher. And yes, the digitization of the world clearly benefits Bitcoin. I mean, we wouldn't even be talking about Bitcoin if we weren't seeing first cousins like Venmo and a variety of other ways. My children don't even carry cash. They barely even know what cash is. So we're clearly digitizing the global economies. You've seen some countries do it explicitly, like India. You're seeing other countries on the way to do it, like China. So we're getting in an increasingly digitized world, and Bitcoin will be that much more accessible by that universe of people that could own it as a store of value. When you think about every bull market, every single bull market has one common thread, an ever-expanding universe of people who own it. So there's probably, the estimates are between 55 and 70 million people own Bitcoin. We really, if you're buying Bitcoin, your bet is that number's going to go to 120 million or to 200 million. And it's kind of hard when you look around and you see that the world's becoming increasingly digitized, not to think that the preponderance of evidence at this point in time doesn't point in that direction. But again, when I think of Bitcoin, I look at it as one tiny part of a portfolio. It may end up being the best performer of all of them. I kind of think it might be, but I'm very conservative. I'm going to keep a tiny percent of my assets in it, and that's it. It has not stood the test of time, for instance, the way that gold has, which has been a store of value for 2,500 years.
Right.
There. When I think about what's happening right now, we're really probably, depending upon how long this lasts, if we're a year from now, we're still in the same situation, we will be in what will be called the second depression. Just depends on whether, unfortunately, this goes to a year with this kind of a lockdown, another year with this kind of a lockdown. So 1.2 million New Yorkers have lost their jobs the last 2.5 months. And I think to myself, I wonder how many of that 1.2 million, somewhere in my nearly 5 decades in this city, either opened a door for me or served me a meal, or maybe they were a tour guide, or maybe they were a taxi cab driver. Who knows what they do? But I wonder how many of those 1.2 million that I intersected with. And then I think, okay, they served me and gave me some of the greatest memories of my entire life, as well as are responsible for the success I've had. So here tonight in our telethon, and supporting any charity, really anywhere, I'm thinking New York, because this is the epicenter. I'm thinking, okay, this is my chance to serve them. This is my chance to be of service to them, to try to equalize the ledger. And I want to be able to say in 20 years to my grandchildren that when they ask me, what did I do in the second depression, I want to look them in the eye and I want to tell them I did more than I ever thought I could do. I think that's the measure.
Paul Tudor Jones, we appreciate you being with us. We are rooting for you. We are rooting for Robinhood, and we're rooting for New York and the rest of the country. And we appreciate seeing you. And good luck this evening. As we mentioned, we'll be broadcasting this evening at 7 p.m. Eastern Time. Paul Tudor Jones.
Thanks so much.
Becky, over to you. Thank you. Thank you, Paul.
Andrew, thank you. And Paul, thank you.